Investors are calling this risk Lehman Squared, and it's to do with the Eurozone, and I'm going to take you through the under-the-radar risks and how to trade them. This is all to do with Greece and the possibility that Greece might leave the Eurozone. There's going to be an election on January the 25th, and the party that looks most likely to lead a coalition government, even if it doesn't win outright, has threatened to throw out certain austerity measures that keep them within the Eurozone. And the reason this could be a catastrophe, or as people are calling it, Lehman Squared, is that that Greece would be shunned from international markets. Their new old currency would devalue to such an extent that we could see capital controls come in place, a run on the banks, etc. And obviously the economy is not in a position to be able to withstand this. But the real risk is that this spreads outside of Greece. So why are markets so sanguine? We've actually seen Italy be able to refinance its debt at the lowest level on records, and even yields on Greek bonds are far below the levels that we've seen previously. The reason is that there are two risks that are not being recognised. First of all, that this anti-austerity movement might actually gather pace, and it might gather pace in these other countries. We are going to be seeing an election, for example, in the likes of Portugal, and these are larger economies that would have a larger impact on the markets. And secondly, what's going to be also most important is this misplaced belief that the ECB has enough firepower to contain the crisis. But first of all, this is questionable, and secondly, it's unproven. So, could Greece actually leave the Eurozone? Well, they're unlikely to give away their golden goose so quickly. This is their one bargaining chip. So what's more likely to happen is that they will be able to negotiate for austerity at a lower level and call this a victory. What does this mean as an investor? It means that when we're likely to see weakness in markets as we approach the elections and as these risks are being realised. So it may offer attractive entry points for the shares of international high-quality companies in Spain and Italy, while we still would avoid Greece.